This is Gerardo Del Real with Resource Stock Digest. Joining me today is President and CEO of Otis Gold, Mr. Craig Lindsay. Craig, how are you this morning?
Gerardo, I'm doing great. It's real nice to speak with you.
It's great to catch up again. You've had two very significant pieces of news here recently. The first piece, of course, is you increased the resource at the flagship Kilgore pretty significantly. You increased the indicated gold resource by 59%. And I know that's important because these nearly 1 million ounces, right? You have 825,000 in the indicated category and 136,000 inferred, come from a single pit. And I know that you've attracted the attention of some mid-tiers and majors that were looking for you to be able to aggressively step out from these nearly 1 million ounces. The second bit of news, of course, is that you did receive a new 5-year exploration permit that's going to allow you to do just that. Let's start with the resource. What can you tell me about it, Craig?
Well, it's a big step for the company. Number one, the last resource was done in 2012, and since that time we've done a bunch of drilling underneath the deposit in 2016 and 2017. As everyone probably knows, we got some really nice hits in the underlying Aspen Formation. We put out this new resource, and what's exciting is, I think you mentioned it, it's a 60% increase in the indicated resource. So the 2012 resource had 520,000 ounces of indicated resource. We're now at 825,000 ounces. And again, with the inferred increasing to 136,000 ounces, we're very close to that million-ounce kind of magic mark that people look for. So it's really the quality of the resource has increased really nicely. The other thing people should be aware of, we were really operating under significant drilling constraints in 2016 and 2017 in that we had no ability to do what is referred to as step-out drilling off of the deposit. We were really drilling underneath the deposit and really didn't have as much chance to aggressively grow the size of the deposit. So with this new permit that we have in place, really it's all of the shackles are off of us from an exploration and drilling perspective, and we can now start to march out off of the deposit up to the northwest, for instance, where the last drill hole on the northwest end of the deposit was 85 meters of 2.5 grams per ton. Down in the southwest and southeastern end of the deposit, where we're leading into an target area called Prospect Ridge, the last hole that was drilled was 24 meters of 4.3 grams per ton. So there's lots of room to start marching out off of this deposit and start growing it aggressively. So we're very excited about that. The other thing, and probably let's take a step back here, and we are still sitting at a grade of 0.6 grams per ton, Gerardo, and that, people scratch their head over that. We're actually looking at an entirely different way, and the Kilgore Deposit compares very favorably with other Great Basin gold deposits that are open pit, heap leach, run-of-mine scenarios. And these things all produce at a grade of about 0.5 gram per ton. So we're above that. And just as importantly, our strip ratio is very low out there. So at our current cutoff grade of 0.21 grams per ton, our strip ratio is down to 1.3 to 1, so an extremely low strip ratio. And when you use lower cutoffs, the strip ratio actually is reduced even further. It's down to about 0.9 to 1, so we have a less than 1 to 1 strip ratio at lower cutoffs. And so from a mining perspective, it looks very attractive. And so, yes, we all want, a 2 million, 3 million ounce resource, and we really think the project has that kind of potential. But right now, we've got a deposit that is beginning to look very attractive from an open pit heap leach potential, and people are starting to knock on the door because of that.
Can you talk, Craig? Can you talk a bit about why that strip ratio is important? Because that gets so lost with a lot of newer speculators, and frankly, some of the more seasoned ones. They see grade, they see 1 million ounces, and they don't take into account how sensitive the strip ratio, or how much I should say, the strip ratio affects the potential margins and economics of these deposits. Can you explain that just a tiny bit?
Yeah, sure. Well, I hope this is a simple explanation. At a cutoff grade of 0.21 and a strip ratio of 1.3 to 1 at Kilgore, you're moving about 70 million tons of waste. If you move down to a lower cutoff of 0.14 grams per ton, your strip ratio goes down to 0.9 to 1, and your waste tons that you're moving move from 71 or million tons to 59 million tons. That's a difference of 12 million tons, and the mining costs out there are about $2 per ton. So that's a savings of $24 million in mining costs alone on a deposit that is 960,000 ounces in total. So those are material numbers, and that is really why the strip ratio is so important.
You mentioned analogues to Great Basin open pit heap leach deposits. Can you give us a couple of examples that people could reference when they're trying to get perspective of these nearly 1 million ounces in the standalone pit and some potential analogues out there?
Sure. Well, you're talking about in terms of Great Basin open pit heap leach deposits. Guys like Liberty Gold, for instance, and the work that they're doing out at the Black Pine mine. Those are the types of deposits that are in that half gram, 0.6 gram per ton range, and those are the kind of ones that we are competing with. And there's many of these kind of deposits that are operating today, and then others that are in development stages. And so that's really there's when we talk about Great Basin, just for your listeners, we're talking generally Nevada up into Idaho, a little bit easterly into Utah. And so we're not talking about competing against open pit heap leach operations in Africa, which have very different cost parameters and grades, et cetera. We're talking about competing open pit heap leach deposits in the western USA.
Excellent. Now let's talk the permit. This is a milestone. It's a significant one for the company. You now have the flexibility to drill on up to 140 drill sites. We've talked in the past about how mining-friendly Idaho has become here in the past several years. This is another great example of that, I believe. Tell us about the permit and why it's so important to the company, Craig.
Sure. Well, a couple of things. The last permit that we did back about 5 years ago, it took us almost 2.5 years to get a plan of operation approved on something called an environmental assessment. This plan of operation was approved in less than 12 months, so less than a year. And so this is and it was a much more complicated permit application for a much larger drilling footprint. So that is that's very, very positive for all of the folks, all of our friendly competitors in the U.S. who are working these kind of in this area, because there clearly is a much stronger interest from the regulatory people to basically simplify and speed up the permitting process in the U.S. So that's had a real positive benefit for us in the most recent round of permitting, but also going forward. And that's also going to have a very positive effect, I think, on some of the folks that are also operating in the U.S. Secondly, and probably more importantly from an Otis perspective, this permit, and I think I mentioned this before, we were extremely permit constrained. We were operating in a very, very tight footprint, and we had no ability to build roads, which was going to allow us to step out and start growing the resource laterally. We're now in a position to be able to do that. So I use that term, the shackles are off. They truly are, and it will be. We'll just have a lot more flexibility going forward. So it's an extremely positive kind of event for us.
You mentioned going forward. What does that look like? What's next? Can we expect some drilling here soon?
Yes, we're hoping to get out there this fall, and we're looking at step-out drilling into what we call Prospect Ridge, and we're also going to be doing step-outs up into the northwest end of our deposit to something called Gold Ridge. So that's going to be the main focus of our drilling this fall. We're also going to be doing a bunch of additional exploration work, ground-based exploration work on some of the new targets that we have out there. We've talked in the past about the gold knob claims. We added about 3,000 acres to our project area last year. The only thing that's been done up there to date has been stream sediment sampling and rock and chip sampling. We're going to be doing a complete soil sampling program over that entire gold knob area. We're also modeling up the Dogbone Ridge area. All of this work that we're doing is going to be leading towards drilling programs at some of these emerging targets.
How many targets do you have in all, Craig? Again, you mentioned having these shackles for years on end and not being able to step out significantly and frankly not be able to do any exploration targeting. How many high priority prospects are you looking at right now that you can point at and say these must be drilled in order and then that obviously are going to potentially add to the million or so ounces that you have right now?
That's a loaded question because it really is a target-rich environment out of Kilgore.
It was meant to be, by the way, Craig.
Well, let's get going here on that. Let me try and respond. At the Kilgore Deposit, that is an area we refer to as Mine Ridge. The current Kilgore Deposit in the Mine Ridge area has a strike length of about a kilometer in length. There's a strike length right along we call it the toe of a volcanic terrace, which runs, and there's the main northwest fault that runs parallel to the edge of this toe that's 5.5 kilometers long, never been drilled. So we've got lots of room in what we call stepping out along the strike at Mine Ridge. Then we've got Gold Ridge, number 2, we've got Prospect Ridge, number 3, Dogbone Ridge, number 4. These are very large exploration areas with numerous targets on each one of them. And then, as I mentioned, we've done a bunch of work last year where we had about 9,000 acres of land prior to the end of last year, and one of my crews, we gave them a mandate to go start doing ground-based exploration work outside of our claim block area, and they were coming up with all sorts of targets outside of this claim block area, and that's why we added these 3,000 acres, and we refer to it as Gold Knob. And this generally, all of these targets generally run along the edge of the Kilgore Caldera margin. So we're seeing a lot of our best targets are right along the edge of the projected edge of the Kilgore Caldera. And I can tell you, as we speak, we've had a crew out at Kilgore since the end of May or early June doing additional generative exploration work in and around some of these new targets that we have, as well as going outside of the claim block. And, we continue to make progress.
Excellent. I couldn't have put it any better, obviously. I want to make sure that we explain thoroughly that, yes, you have nearly 1 million ounces. It's from one single deposit. You've just expanded the area that you can target and the targets that you can drill significantly. What's the cash position look like, Craig?
Cash position is less than $1 million right now, so that is a challenge for us. At the same time, we're sitting on little over $2 million worth of additional liquid investments that we're looking at marketing out of to generate some immediate cash. And then we're in various discussions on additional ways to access capital in the near term. So if there's a weakness in the story, it's that we are in a difficult financing market and we don't have a lot of cash in the bank. The good news is the new permit, the new resource is generating a lot of new opportunities for us. And again, this focus on this open pit heap leach model is really, I think, going to hold us in good stead. And I want to jump back a little bit. You were asking about some kind of Great Base and open pit heap leach comparables.
Yes, sir.
And looking at kind of 7 or 8 of them right in front of me right now, and these include the Emigrant Mine, Newmont, Long Canyon, Newmont, Marigold, SSR Mining, Round Mountain, Bald Mountain, both Kinross projects, the Mesquite Mine that New Gold has. Their run-of-mine open pit heap leaches, their resource/reserve grade on those deposits average 0.53 grams per ton, an average a recovery of 70.3% under a run-of-mine basis. Kilgore is sitting at 0.59 grams per ton, so we compare favorably there on our indicated resource. And then our gold recoveries are sitting around 80 to 85% at 1.5-inch crush. So this situation does compare favorably. I can't throw out strip ratios to you on those deposits I just mentioned, but I can tell you, 1.3 to 1. This looks very, very attractive.
We talked a bit about the cash position. Let's be clear that you have significant shareholders that I'm pretty confident in saying are very interested and keen on stepping in and filling some of that some of that treasury. Those include Agnico. Can you share a couple of the other names there, Craig?
Sure. Well, Agnico does own about 9% of our stock, and they've been very supportive investors who came into the company a year ago. We've also got a heavy complement of high net worth investors out of the United Kingdom who have supported us strongly. A guy by the name of Chris Lee Barber owns over 10% of the company, private investor out of the UK. He remains very strongly supportive and excited about what we're doing. We are starting to grow our investor base down in the U.S. Van Eck Funds out of New York owns a chunk of the company. I think they're listed just around 5 million shares in the company. So we are looking to grow that in investor base. And keep in mind, investors are now looking, it's a bit of a flight to safety. So people are now looking a lot more at gold projects in places like Canada and the United States simply because the regulatory environment is much more stable, and despite what you may think, the political environment is much more stable. The risk of basically your claim ownership is much better defined in North America than it is in places such as South America or Africa, arguably. And people are starting to look a lot more. People who traditionally invested in high risk, high reward, exciting jurisdictions have been burned, and they're now looking a lot more closely at places such as the United States. And you're seeing that with a lot of institutional money, strategic money coming into the U.S., and frankly coming into Idaho in particular. Let's talk about Midas Gold, company that I have a lot of time for. They're doing great things, and folks such as Paulson and Company out of New York have written a big check to them. Barrick, big check to them. Revival Gold, company who we also think very highly of. Orion Mine Finance has a big shareholding in that company. RCF out of the States has bought a big position in Liberty Gold, who's developing the Black Pine mine in Idaho. Integra and a lot of the Cisco is involved in that from an investor point of view. So there's some very smart money that's coming into the United States and specifically being focused on Idaho itself. So it's, I do lose sleep over the market being difficult and availability of capital being a challenge. At the same time, relative to many of our competitors in other jurisdictions, I think we're in fairly good shape.
I couldn't agree more. Craig, thank you so much for your time. Is there anything else that you'd like to add that we didn't touch on? I know that was a pretty thorough update, and I appreciate you taking the time to give it to us.
Well, I think, I really thank you for taking the time. One thing perhaps we haven't touched on, and it's been a real positive development at Otis. The two fellows that I've worked with for many years, Dr. John Carden and Mitch Bernardi, who have been very instrumental in moving Otis forward from a technical/geologic perspective, retired at the end of last year, and so I went through the process of finding a new VP exploration to lead our technical team, and we landed on a guy by the name of Alan Roberts. And Alan has just been doing a great job for us, a really hands-on guy, younger geologist. It's his first time as a VP exploration, but he does have over 25 years of experience in the field. He's run big programs. He's just he came to us from the Castle Mountain mine in California. That's part of the Equinox Gold Group. So that's an open pit heap leach run-of-mine scenario, low grade. And he's worked very hard at taking that from a development stage into a kind of a shovel-ready phase, and that's exactly what we're doing at Kilgore right now. And so he's the perfect guy to be working with us. He's been doing a great job. Very happy to have him on board, and he's making a real positive difference for Otis. So that's something we hadn't talked about. That's been a real positive development for Otis.
Fantastic. Craig, thanks again. I appreciate the time.
Yep, no worries. Good to talk to you, Gerardo.
We'll chat soon.